time frame. So this right here would be a monthly, weekly, or daily. And then when we drop down to the 4 hour, it will be within the same zone itself. We'll wait for our price action so we can take the sell if it is available to us. Okay. All right. Now, as we can see, market did continue giving you lower lows and lower highs. And then after this previous low here, market went and broke. It broke this previous structure, previous low high, right? Broken as far as it went above it to close above. Now we have a higher high. Now market retest. This right here would be where you will look for entry if you're looking for a buy, right? So we got a retest to go up. So we come from a lower low to a higher high. Now doing this uptrend after a higher high, you are looking to get a high low, right? Where each high is getting higher than the previous one. Even though this is high, it's lower than the previous structure high. Okay. Nothing more, nothing less. Straight to the point, easy money. Okay. Now, as you can see, market did go up to give you a new higher high. Okay. And then after it gives you that high, it went down to give you a new high low, right? Where that high is higher than the previous one, right? And then eventually we got two equal highs. See that? Where two equal highs is pretty much when the market goes to the previous zone, stop there, did not break it, right? So this is the same higher high. There's no need to write more than one. If you did, it's okay. That right there will be considered as a double top, right? Because it went up here, stops here, went back up to hit the same structural point, and we'll look for it to fall. Now, after this, we know market did fell, right? When it did fell, it gives you a lower low, right? Now that lower low is a lower low because it's lower than the previous high low. Now we're going to anticipate or wait for the market to buy up to retest the previous structural point. Now, when it comes to the retest point, it doesn't mean that it has to stop exactly at the previous low. It could always go a little bit higher, and it also could always go up to the top. Okay. All we have to do is just wait for the market to retrace, go back all the way up at least 50%. That is our bare minimum. If we think about using the Fibonacci, right? 50% retracement within a price action, then we take that. 61.8 retracement. Once we get a price action, we take that. Now, remember, we don't take our trade without a price action. Okay. If we are taking our trade without a price action, at that point, we are gambling. We are saying that market is going to sell instead of simply waiting for the market to tell us now, hey, we are now selling to join them, right? That's why the price action is very, very, very important. All right. Now, once market bought up, it stops there to give you the PA to fall. Now we currently have a low high. See that? We went from an uptrend giving you higher highs and higher lows to a downtrend where we get lower lows and lower highs, so on and so forth, right? We got a break here, small retest. A retest is still a retest, but small one, not a 50 that we would like. Now we have a new low, right? That new low is lower than the previous low, as you can see, right? And then we got a new high, right? Yes, it's a high. It's higher than this lower low, but this high is lower than the previous high. That's why it's called a lower high until it comes back down to here to give you a lower low, right? And that lower low will match a previous structure point to give you a double bottom possible setup. Okay. Now, don't make this let's continue to here. Don't make this difficult. If you are watching this on YouTube, just again, if you wanted to get the full video itself, it is on YouTube. Just type in Royalty FX Academy. Okay. Now, if you are watching this, feel free to like slow it down or pause it at any moment in time. That way you can go back, right? So I try my very best to speak as clearly as possible and be as detailed as I can be to make sure you guys understand, right? My purpose is to make sure you guys understand what's happening. That way you can just simply read and react, okay? I don't want you to know it, because when you know it, you're not exactly understanding what to do. You know that's what it does. But if you don't understand it, you can't interact with it, right? So I know it all, say it all. Somebody that understands will just simply act, all right? I don't want you to know. I want you to understand, all right? knowing and understanding. All right, so let's go ahead and take a look at another one again. All right, it's gonna be very repetitive. All right, get a little man right here. It's the retest. All right, just like before, this is a bearish trend. Okay, Pete, how do you know that's a bearish trend? Well, let me mark the structures itself. That way we know that it's a bearish trend, right? A bearish trend consists of what? Lower lows as the bottom points, right? Lower lows, where each low is getting lower than the previous low. And also in a bearish trend, right? Your highs are lower highs, right? Why? Because each high is getting lower than the previous high, right? See that? Boom. All right, see that? Straight to the point, easy structure. Again, every technical analysis, either from your trend line, right, to your zones, to your EMA, estimate moving average, right, has to be evaluated based off the monthly or the weekly. So if you're looking for a break and retest of a trend line, the zone, or the moving average, it has to be either based off the month, week, or the day. Remember, the bigger picture. You don't want to get stumped out, right? Even though if your intuition was correct, or your technical analysis or your bias was correct, because you trade in a lower time frame, you will wick yourself out too many times. You'll run out of money, and then when the market start going your way, you'll get very upset. Okay, so remember, look at the bigger picture. The bigger picture gives you freedom, time to chill, spend time with your family, get a second job, start a new hobby. All right. Now we do have a downtrend, like I was mentioning before. Right, we got a downtrend that's giving us lower lows and lower highs. And then eventually, just like before, market did break. Okay. Ooh. So that market did break to give you a new high. Okay. Now it's not just a regular high, it's a higher high. Why? Because it's higher than the previous high, right? You see that? Because it's higher than the previous high. Now we're gonna wait and anticipate for when the market give us a higher low. So let me go ahead and throw that in there also, even though we're going over a bearish trend. A trend reversal after market breaks a previous high, right? Just so you guys can understand that, okay? For the market to give you a trend reversal, meaning coming from a selling market to a buying market, it has to break a previous high. Vice versa, for the market, if the market itself is buying, right, and you're looking for a sell, that trend reversal, a previous high has to be broken. So with a bullish market that's buying up, a previous high such as the high low has to be broken to give you a new lower low, right? Meaning, see, if it's doing this, okay, a previous high has to be broken. A high low has to be broken. See how it broke through and then to come right here for you to take that sell. All right. So just want to throw that in there. So I wanted to actually do the drawing because I know I'm saying it, but I want to draw it out so you can actually see and understand it. Right. Because I don't want you to just hear it. I want you to see it. Now, again, market was giving us lower low, right? At this point, it went and gave us a new high that's higher than the previous high. Now, with a bullish trend from a bearish going to a bullish, we look to buy at the high low. So, note to self, right? You buy, note to self. If you are in a bullish trend, you look to buy at the high low. Okay, the high low is the retracement point. What do I mean by that? Let's just say the market goes up and it stops right here, right? Cool. And it start falling. Let's change the color, right? It start falling. Awesome. Now, since it stops there, you're going to go ahead and put a zone. You're just going to mark it, right? Now, when and if, okay? When and if the market goes up and break through like so, right? You will wait for when and if it comes back to the zone. Doesn't matter if it stopped exactly at the zone, right? When it comes back to the zone, right here, and then you will wait for the market to give you a price action. Now, when they come to the structure itself, right? I mean, the structure. So this is the high low. So you're gonna wait for the market to give you a new high that's higher than the previous one, but high low, right? Like so. So for a bullish trend, you buy at a high low, right? Bullish trend, a buy-in market, you buy at the high low. All right. Let's go ahead and continue. Let's get back to the downtrend. So bullish trend, you buy at high low. All right. So we know market broke previous high to give you a higher high. Now we're just waiting for the market to give us a high low. It doesn't mean that it will, but we anticipating. What do I mean by that? Because yes, it's fallen or it's coming back down, right? If you just randomly go click buy, you might end up like the Backstreet Boys and the market's going to keep on just falling. You might as well say buy to your account. Okay. Um, you want to wait for the market to give you a price action, understanding that it can stop at any specific zone, previous low, as you can see here, right? Since it went past this, it's either going to be one of these. Once the market stops at a specific point, it will give you a price action in the 4 hour, one of the sixes, either a bullish engulfing that engulfed the last two previous selling candles, or it will take two bullish engulfing to, it will take two bullish candles, I'm sorry, or it will take two bullish candles to engulf the last selling candle, the last bearish candle. Okay. So, you know what? I know I was saying it. Let me go ahead and show it to you, right? If this is the last selling candle, right? Sometimes you might get two bullish candles. These will be bullish candles. It took two of them to engulf it, to take over. So, right? It closed above it. It's saying that, hey, now buyers have taken over. Sometimes you get this variation here, right? Right? Sometimes you get one bullish candle that engulf the last two selling candles or the last two bearish candles. See that? It engulfed the last two. All right. Just so we understand. So again, different variation. I want to mention that one more time. If you are interested in learning this method, we are now accepting students. Okay. We teach 4 times a week, and our one-on-one currently right now is free. Now, the book itself, if you want to learn these price action, go ahead and check me out on Amazon. Just type in Royalty FX Academy. You'll be able to see the master collections, all 7 books. Pick the ones that you need accordingly, okay? Um, and also, check me out on YouTube. You'll get the full video itself breaking down into like 3 different videos of 18 minutes long. That way you're not sitting there for at least a whole hour, right? Just break it apart while you're eating at lunch or doing your break at work. You could watch the videos, okay? So, like I was saying, right, we got a break of structure, right, in here. Once market give us a PA, aka a price action, also a bullish engulfing, we will take our buy to continue up. Not just continue up, we're looking for market to break previous higher high to give you a new high that's higher than the previous high. Okay. All right. Now I have another one. When it comes to trend itself, the downtrend, sometimes um, it will consolidate or range in between, but it's still a bearish trend. You see that right there? This is a bearish trend. Now, I know I'm using the bearish trend. If you want to, you could always place a trend line from one point and run it straight down to current point. Now, look, let me go ahead and mark these low points for you. That way you understand, yes, that it is a selling market. Right here, we have lower lows. These are lower lows, right? At this point, market just sat in range. What do I mean by that? It consolidated, right? It just stayed within the same point. It ranged within the same area, not giving you any new lower lows, okay? Or no new lower highs, right? And then here, it finally broke new low, right? So you see right here, it's the same, right? It bought up, right? Range again. The only difference between this consolidation and this one right here is just like it's so far, it's a lot farther apart. Where if you took this sell here, right, and you happen to close it here, or you got wicked out, you'll be able to take it again. Okay. Now, when you see this in the chart, this will be more of a consolidation, right? Where it just stays as a in a rectangle property, right? So it just stays in there, right? It just stayed in, and then for it to fall. Where in this one, after it broke, it went up to give you that retest point with your price action, fell, right? and then went back up again to the same area and then the fall. So that right there is the same low. There's no need to put a new lower low, but if you want to, by all means, it's the same structure point. Market broke, we got a new low, right? And then a new low, right? So each low is getting lower than the previous low. Now, at this point, market started to wedge, okay? It wedged up. It's wedging up, right? So it's not ranging. Where this one was ranging, it's like a rectangle, right? But this one is wedging. What do I mean by that, right? So with this, I can literally run a trend line like so. The purpose of the trend line is to show you that the market is now trending up. Now, even though it's trending up, it has not broke a previous low high to indicate markets have broke the overall trend for the higher time frame. Now, all it was doing is giving you that retest, right? It broke this one, right? Instead of just like this right here, instead of giving you a regular retest, a regular pullback, it started ranging up, right? It went up. So look, let me wedge it up. See that? So if you use the channel, either if you're using TradingView or the MT4, there's something that's called a channel. You'll put it in there. You will notice that how the market is within the channel. So it's just wedging up. Now, what you're looking for is a breakout out of that channel based on the trend. The breakout will be, you want it to break through, okay, to give you that retest point and then to sell. But you see that? So again, it's just a matter of patience. Now, just like I mentioned before, waiting for that 60%, the 50%, or even 75% retracement for that before you look for that price action or anticipating price action within that range instead of trying to get in early on a lesser fib number. I won't even mention because we don't speak that to existent, right? We don't deal with that. Now this right here is 50%, right? A little bit above it, we got 61 and so on and above, right? It could have went, like I said, all the way to the top to give you the double top aspect, but it just wedged up, right? It was wedging up, but it didn't give you a high that's higher than the previous high. What do I mean by that, right? So after every lower low, we look for a low high, right? See, all these are low high, but it's within one range, right? Low high, same thing. Let me make this a little bit better. Low high, boom. All right, it's the same thing. If you wanna, excuse me, if you wanna do that, by all means. But to me, it's the same, right? And then boom, right here, another low high, right? So for market to give you a trend reversal, right, a previous lower high has to be broken. That right there is the previous low high. Okay. Now, can market give you a small break and retest, a small low high break to go up? Yes, it can. But when we're looking at previous low and previous high, this is the previous high and this is the new low, right? So we're looking at this right here to get broken. Okay. We look at this to get broken. It did not. It's just a deeper pullback. It's a deeper retracement, but it was just wedging up, right? Where it's giving you lower lows, lower highs, my bad, I'm sorry, where it's giving you higher highs and higher lows within that selling range. So I'm showing you this to help you understand. Yes, we see this. It doesn't mean the trend have reversed yet. Okay, this has to be broken for it to be considered as a trend reversal. Now, could you have bought it within this point? Yeah, you could. Just remember, you could, but remember, this is the previous high. All right. And then as you can see, let me go ahead and clear this right there real quick. I'm going to keep the channel in there. All right. As you can see, all right, as you can see, within this, we got a small double top itself, right? It did this, right? And then to fall, right? So again, it's just a matter of being patient and waiting for your price action. Now, let's just say, hypothetically speaking, you took a bearish engulfing within here. There's absolutely nothing wrong with that. Why? Because your stop loss is up there. Okay. And when it comes to your stop loss, you have a predetermined stop loss, meaning you say, hey, look, man, I have $2,000 in my account. I am willing to risk $200. So no matter what happened, the stop loss is going to be $200. It doesn't matter if it's 50 pips, 100 pips, 500 pips. I'll drop the lot size accordingly. That way it equals $50. Right? That way you don't break your rules. You're not over leveraging. Right? 1% is 1% no matter what. You just got to stay consistent. 2% is 2% no matter what. All right? Just adjust the lot size accordingly. That way it equals that amount itself. Okay? So as you can see again, right? Back to this, boom, and it fell. And then again, within point right here, and then to give you the next one. So right here is a lower low, and then up there will be considered as all lower highs, okay? That right there will be all lower high, all right? So that's just a different variation of downtrend where you get the consolidation, right? Or ranging, okay? Where the market did break and then they give you a double top before it sold. And then in the case of this one, it wedged up before it starts selling. Please remember, it's the stop loss placement. So just same thing with here. If you have taken your sell here, previous high will be your stop loss. Even though it sold, came back, boom, it never wake you out. Easy money, okay? If you had missed this, you took this as your sell, right? Stop loss is still above, okay? Never wake you out. Boom. And you don't have to worry about, oh man, I'm about to lose, because again, you wrote it down. You already understand, hey, no matter what happened, I'm willing to I'm willing to lose. I'm willing to risk 150. All right. I'm sorry, 250. Whichever amount that it is that you was okay with.